Good afternoon. It's Sunday, the 27th of October 2024. Welcome to yet another episode of Weekend Commentary on the markets of what happened last week and next week. But our focus today will be on a single topic about the FIIs selling, that is, our FIIs quitting Indian markets. This is Vijay here, who's been doing this for quite some time. And thank you. The number of subscribers is increasing. I would be very happy if each one reaches one and our family of subscribers increases. And so that will motivate me as usual. And this kind of quality content, I doubt you will get it everywhere. So it will be in our own interest that you go around circulating the good word. Now let's come to the topic. So there it is. What is the true picture? So there seems to be a lot of panic. FI is selling. This is, of course, just a picture. It's almost something like this happening in the minds of the retail investors who have seen a huge fall in their holdings between September end and yesterday, as on Friday. Now, the first thing what a typical human being would do is find fault with somebody else. They will not find fault that they have bought highly overvalued shares. And at a particular time, when the supply meets demand, invariably you will have a correction. Now, the correction can be mild, it can be medium, or it can be severe, or also it could be where it goes into recession. I have discussed this in the past that anything about 10% is a normal correction up to 10%. Between 10 and 20% is a somewhat a severe correction. Above 20% is a bear market, and above 50% is what we call recession. This was what we discussed last week. So now when we buy shares at very high prices, and in terms of not only price, I'm not talking about saying in terms of the values on that day, I'm talking of the P ratios, the performance, possibilities, all that, then we should be prepared for pain. So when the pain comes, which it has come this month, and it has been consistent, then invariably we find scapegoats. So the first scapegoat we have found is FIIs. Now, FDI investment also is poor, but FIIs also have been selling this month. It is in terms of value, it has been the highest ever, 1 lakh crores as we speak. Now, what is 1 lakh crores? 1 lakh crores is the highest in this month vis-a-vis any other month since FIIs were granted license in 1992, and the first of the FIIs came in 1994. Now, FIIs in the initial years had a big stake in the market. See, FIIs can buy only up to 24%. So at best, their stake in the Indian markets can be 24%. So for many years, it was to be around 20, 21, 22. And now it has come to 16.3. Now, the last few months, FII investment has been only 16.3. You will ask us as to how, if it is only 16.3, if so much of selling is there, how it is still stable at 16.3. Now, that has been compensated by investing. They are investing in IPOs and FPOs. For instance, Hyundai. Now they have invested and it has been listed. So now if you look at the market cap of all the stocks in the universe, Hyundai also will form a part of that. So FII's investment, which is about 12,000 crores there, will be included in that. So 16.3 is the lowest in many, many years. Now, what has happened to the market? Till last month, we were at the all-time high. So despite FIIs coming down from 22, 23 to as low as 16.3, we have survived. So therefore, the fall in the market cannot be attributed to the FIIs. Now the point number 2, FIIs have actually been net sellers in 8 of the 10 calendar years since 2015. They were net buyers only in 2019 and 20. So you have lots of analysts talking about FIIs suddenly selling, they're moving out of India to China, they don't like India because of taxation and blah, 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 blah. But what are the facts? See, we may have opinions. Our opinions may go right or wrong. But facts are sacred. Many people, including the so-called learned commentators who come on the mainstream media, social media, who write in the newspapers, they just do not check the facts. The facts are very simple. Out of 10 years, 8 years calendar years, FIs have been net sellers, including 2024. The only net buyers in 2019 and 20. Please remember that. So next time you hear of that FIs of leaving, quitting and all, you tell them what were they doing in 2015, 16, 17, 18, 21, 22, 23, 24. Okay. So if somebody is not been there in our market for 8 out of 10, that means only 20% pass mark, like what the Maharashtra government is doing, 20% pass mark. So is that really a reliable indicator? I don't think so. What do you think? Now let's look at this month. This month, 1 lakh crores. So what happens is 1 lakh crores, it is paling in comparison with the past, that is 2007, 2008 and 2020 during COVID time, in terms of proportion of market cap. See, if that time they only sold 40,000 crores and now they've sold 1 lakh crores in this month, 40,000 crores was sitting on an index of some 7,000 or 8,000, or even in 2007-8 we are talking of 6,000, 5,000, 4,000. So we should always see it in terms of market proportion of market capitalization. I will come back. There is a very nice slide at the end where I will show you where in what were the FIs selling in terms of the proportion of market capitalization, of course, only for BSE 500. Now, when you say market cap 16% is of the entire universe, which is not only BSE 500. Now, if you look at gross sales, see, we should also look at gross sales and net sales and gross purchases and net purchases. Now, this month, they have sold a net of 1 lakh crores. The gross sales is 3 times that, 339 lakh crores. Okay. Now, how is this comparing with this financial year? In August, they sold 443 lakh crores. In May, they sold 424 lakh crores. In June, they sold 389 lakh crores. In September, 379. And in July, 350 lakh crores. So out of the, now we only a month where they have done well has been August. Not August, sorry. None of the months. Actually, in the 6 months, 1, 2, 3, 4, 5, 6 months, they have been only in May, May month and April month. These two, not May, sorry, April. April, they have not sold as much as what they have sold now. September is 379, we may still reach there. But what I'm July is 350, we may still reach there. But what I'm saying is, you have to look at it in perspective. Always look at it in perspective. Look at data and then analyze. And so we are nowhere near August 443 lakh crores. So, and nowhere near May, we are nearing maybe July. So gross sales is not something, we are not at the highest level in October. Now look at gross purchases. And gross purchase is 239 lakh crores. If you have sold net of 1 lakh crores, there have been gross purchases. So it is not that FIs are coming every day and it's only selling and walking away, as indicated by the commentary in the mainstream media and social media. Every single day, FIs come and buy and sell. On certain days, the selling is greater than buying, so it reflects in the net selling. So even in this month, when the markets have fallen so much, they have bought worth 239 lakh crores. Of course, this is significantly, this is lowest in the entire year. This 239 lakh crores is the lowest monthly gross purchase in this year. But it is significantly better than the average monthly purchase in calendar year 2023. Of course, the market was a little lower at that time. But if you look at the numbers that time, sometimes it was 123 lakh crores and sometimes it was 150 lakh crores. Now we are at 239 lakh crores. So it is not Nifty has not doubled, or the market has not doubled in the last 8-10 months. So your purchase is not insignificant. It is anemic for this year at 239 lakh crores, but it is significantly better than the average monthly purchase in CY 2023. Now here is the last slide. And this is what is very interesting slide, I would say. Now, just let's take the start date. Probably, I don't know whether you'll be able to see it clearly, but this is the best I could do. Say during the global financial crisis, there were $15.4 billion. This chart is talking about $1 billion. So that time the average market capitalization was about 1,000 crores. $1,000 billion. So our outflow as a percentage of average market cap was about 1.5%. Today, average is only about, if you take this is only 0.2%. This is 1.5%. It is only 0.2%. Okay. Now you look at the US credit rating downgrade. That time it was 0.2. That was in July to October 2011. You see, the number was quite high in the geopolitical crisis and in your geopolitical worries. Actually, last year nobody bothered about it, but between November 21st and July 22, stocks which fell numbered 50% of the stocks in the universe fell 40%. Today, it's still not that number. Today, still not that number. People talk about we have not seen a bear market. FIs have created a bear market. This will be the mother of all bear markets. Maybe in the future it will be, but today it is not. Today it is, a moderate correction in the indices, because all of the indices have not fallen down more than 10%. So it's just a moderate correction. Even if it is fallen 10, 12%, or if it falls further, it is still a moderate. When we have to be warned is it when it reaches 20%. But before that itself, we can find out whether it is going to go down further. Now we are entering a week which is traditionally a month. November is traditionally a very good month. The other day I heard of one famous YouTuber, talking of November being the worst month for equities in India. If you go and look at the charts, there is very rarely a November month is very weak. Only maybe in 2010, November month was weak. In 2016, November was weak because you see that time was the demonetization. So generally, November is a very strong month. So seasonality wise, we are getting into a seasonally strong month. So the probability of November being good this time is very high. So in such a case, we should just view it with respect to where we are and what are the probabilities of the market going up or down. Because over the weekend, there have been a lot of calls to me, a lot of direct messages saying that I believe the markets will go down by 2,000 points on the Nifty, which means, you see, we are sitting at 24,100. They're talking of 23,200 or something like that. It's possible anything can happen in the market, but what is the probability? In my opinion, the probability of it going to 22,200, 2,000 points is 22,000. Some people are talking of it breaking the June 4th low, which is 21,200, which means 3,000 points, right? The probability of it breaking 21,200 in the next few weeks, in my opinion, and analysis and data says it is very, very low. The probability of it going down to 2,000 points in a seasonally strong month like November is also low. The probability of it going 1,000 points from here, which is 25,200, is very high in my opinion. So therefore, I am basing this opinion on data. So to summarize, FIIs have not run away from Indian markets. FIIs have been net sellers 8 out of 10 years. So it is not something unusual. The 1 lakh crores looks big, but as a proportion of the market cap, it is much lower. As we have mentioned here, it is only 0.2%. So therefore, we have to understand that, we are, that what is happening today is primarily because the prices in the mid cap, small cap, micro cap had gone beyond, fair value, and they are correcting. It is quite possible that the correction in those sectors may continue for some more time, and November may be a bad month for them. But if you're talking of index, I am unable to believe that index will be bad for November at this point of time based on the data available. So I'm going with optimism as usual, not because I like to be optimistic, but the data is showing me to be optimistic. So thank you for joining me. Have a nice weekend.